Hey everyone, welcome back to Corporate Decoder, where we decode the complex world of corporate finance, and today we're diving deep into SmartFinancial's latest report. Get ready because this one's got some interesting moves, especially when it comes to their loan books and how they're navigating the financial markets. SmartFinancial Inc., the company behind SmartBank, has just dropped its quarterly report. We're going to break down the key numbers to see how they did in the second quarter of 2025 and what it tells us about their overall health. First things first, SmartFinancial is a publicly traded company, and their common stock trades on the New York Stock Exchange under the ticker SMBK. This report gives us a snapshot of their financial performance from April to June of 2025. Now, let's get into the nitty-gritty, starting with their financial statements. The core of this filing really lies in these numbers, showing us where they stand. Here's their balance sheet. Think of this as a company's financial photo album, showing their assets, liabilities, and equity at a specific moment, as of June 30, 2025. SmartFinancial's total assets were roughly $5.49 billion. That's a nice increase from about $5.28 billion, at the nice increase from about $5.29 billion. That's a nice increase from about $5.28 billion at the end of 2025. This growth in assets is generally a good sign, showing the company is expanding its financial footprint. Looking at their assets, a huge chunk is their loans and leases, which at over $4 billion represent the bulk of what they do. This gross loan and lease portfolio grew nicely from $3.87 billion at the end of the previous year, showing a healthy increase in their core lending business. This growth is generally positive, but as always, we need to keep an eye on the quality of these loans. On the other side of the balance sheet, their deposits are really impressive, reaching almost $4.9 billion. This is a significant increase from $4.68 billion at the end of 2024. Deposits are the lifeblood of any bank, so this growth is a strong indicator of customer trust and a solid funding base. This next statement shows us how much money SmartFinancial made or lost. We're looking at their income from operations. For the second quarter of 2025, SmartFinancial reported a net income of about $11.7 million. That's a good jump from the roughly $8 million they made in the same period last year. This increase in profit is primarily driven by a rise in net interest income. Their net interest income, which is the difference between what they earn on loans and securities and what they pay on deposits and borrowings, grew significantly. It jumped to about $37.9 million in the same quarter of 2025, compared to about $31.9 million in the same quarter of 2024. This boost is a great sign for their core banking operations. They also saw a nice increase in non-interest income, which includes things like service fees and investment income, going from about $7.6 million to nearly $8.9 million. This diversification of income sources is always a positive for a bank. However, their expenses also went up. Non-interest expenses, which cover everything from salaries to technology, rose from about $29.2 million to $32.6 million. This increase is largely due to higher salaries and employee benefits as they grow. It's important to watch if this expense growth outpaces revenue growth. Comprehensive income includes net income plus other items that affect equity, like unrealized gains or losses on investments. The net income we saw earlier is the starting point here. Here we see a positive swing in their unrealized gains on securities available for sale, meaning the market value of some of their investments went up, adding to their overall equity. This went from a gain of about $1.5 million in the same period last year to a gain of nearly $2.2 million this quarter. This shows the market is treating their investment portfolio favorably. Now let's talk about cash flow, which is super important. This statement tells us how cash is moving in and out of the company from its main activities, operating, investing, and financing. Their net income for the first 6 months of 2025 was around $23 million, a nice increase from about $17.4 million in the first half of 2024. The cash generated from their core operations was about $28.3 million for the first 6 months of 2025. This is more than the $23.6 million they generated from operations in the first half of 2024. This indicates their day-to-day business is bringing in more cash, which is a very healthy sign. When we look at investing activities, we see a large outflow of cash for net increases in loans and leases, over $219 million for the 6 months. This is a direct result of that loan growth we saw on the balance sheet. While loan growth is good, it does tie up a lot of cash. On the financing side, they experienced a substantial net increase in deposits, bringing in over $85 million. This inflow of customer money directly supports their lending activities and demonstrates strong deposit gathering. It's important to remember that these are unaudited financial statements for the interim period. Management believes they are accurate, but they haven't been officially checked by external auditors yet. The real numbers for a full picture will come with their annual report, but this gives us a very good interim look. Here's a look at their earnings per share, a key metric investors watch. For the second quarter, diluted earnings per share were 69 cents, up from 48 cents the previous year. For the first 6 months, it's $1.36 compared to $1.03 in 2024. That's solid earnings growth, which is always a plus. Smart Financial holds securities available for sale and securities held to maturity. These are investments that help them earn returns and manage their balance sheet. Their available for sale securities portfolio is valued at fair value and grew to about $502 million. And their held to maturity securities are valued at around $124.5 million. The fair value of these, which is noted as being around $108 million, shows a slight decrease in unrealized losses, which is good. This section is key. It discusses their loan portfolio and how they account for potential losses, known as the allowance for credit losses. The company's loan book is heavily weighted towards commercial real estate with over $1.1 billion in non-owner occupied commercial real estate loans. This segment, along with owner occupied commercial real estate, which is close to $1 billion, represents a significant portion of their lending. While these can be profitable, they also carry higher risk, especially in uncertain economic times. Their allowance for credit losses stands at nearly $40 million. This is the buffer they've set aside for potential loan defaults. This amount increased from about 37.96% of their total loans. Banks have to follow a lot of strict rules about how much capital they need to hold. This note talks about that. Smart Financial and its bank subsidiary are well above the required regulatory capital levels. For example, their total capital to risk-weighted assets ratio is over 11%, comfortably exceeding minimum requirements. This suggests they are financially sound and can absorb unexpected losses. Interestingly, Smart Financial reports that it operates as a single reportable segment, the general banking unit. This means they don't break down their performance by different types of banking operations, but rather look at the company as a whole. This simplifies things, but means we don't get a granular view of how each specific division is performing. Their total non-interest income for the second quarter was just under $8.9 million, an increase from the previous year. And looking at expenses, salaries and employee benefits saw a notable increase, reflecting their growth and investment in people. This rose by about $2.3 million in the quarter and nearly $5 million in the 6-month period. Lastly, let's touch on their commitments and contingent liabilities. These are basically promises they've made that aren't fully reflected on the balance sheet yet, like agreements to lend more money or standby letters of credit. They have a substantial amount of commitments to extend credit nearing $1 billion. This shows they are actively working with potential borrowers, but also means there's potential for future growth if those commitments are drawn upon. Overall, Smart Financial seems to be in a solid position. Their net income, loan growth and deposit growth are all trending positively. They're also well capitalized, which provides a safety net. However, the significant exposure to commercial real estate loans and the rising non-interest expenses are points to monitor closely. Their strategy appears focused on organic growth, and while that's a prudent approach, they need to manage those expenses effectively to sustain profitability. It's a balanced picture with some good signs and a few areas that warrant attention moving forward. We'll be watching to see how they handle these dynamics in the coming quarters. Alright, that's our look at Smart Financial's latest filing. What are your thoughts on their performance and strategy? Let us know in the comments below. If you found this breakdown helpful, give this video a like and subscribe to Corporate Decoder for more insights. And don't forget to join our community on Discord linked in the description. Thanks for watching and we'll see you in the next decode.